Hi everyone, so it is Sunday the 6th of December. We're obviously hurtling towards Christmas, only a couple of weeks left. I'm probably going to do less and less trading beyond the 15th. I think I'll take a break from between say the 15th or 16th of December up until about the 5th of January. We'll see if I still produce these videos between now and then. It really depends if I have the time. It's during lockdown, I think I'll probably be staying home. So what I'm going to be doing in this video is I'm going to be having a look at the global indices. Overall, they are very optimistic. They are due for some corrections on the monthly time frames, and so that might, and they're all still bumping their heads up against key resistance monthly or all-time highs, but kind of key resistance levels, and therefore that means that until they really break free of those, my confidence in looking for new opportunities, I'm going to be a lot more cautious. At some point, if we do have a monthly correction, which might be January or February, if we don't have it before then I think that's a good thing. I think we need it. We need to have a bit of a correction, let off some steam, so that we can begin anew, so that we can have a kind of a new bull run after that, and so we can continue ideally bullishly throughout the rest of 2021. At this point in time, the signs are more positive and more upbeat than anything else. Keep in mind, of course, that the indices are not a reflection of the economy, all right? So they're really a reflection of stocks, and that's really a reflection of generally the majority of incredibly wealthy individuals. So they're not as connected, they're not as correlated today as they were 50, 60 years ago. So just be aware of that I'm not trying to talk about the economy per se, but I am talking more about the sentiment in terms of potential money-making opportunities in the markets. So let's go to the charts and have a look and see what's going on there. All right, so I think I'm actually going to start with the NASDAQ. Let's have a look at the NASDAQ. The one that is obviously now quite sort of overextended. I like this little bit of a consolidation we had, which kind of brings it closer to the moving averages. So that's a good start. It is still overextended, but this is a better position than the fact if it had just continued straight up here. So overall, I like that. The weekly looks really good. It's not that overextended. It's had a consolidation and it's taking off. Those are all good things. I highlighted last week this area in orange. I wanted to see price break through that, and that is indeed what's now beginning to take place. The momentum indicators are nice and bullish, and actually price could now at any point could kind of come back to test this area. In fact, the smart thing to do would be to potentially kind of mark it as something like that. So that would be an overlap of area where price would come back into the previous highs, into the moving averages, or just back up to the top here and continue on. So there could be a bit of a retracement this week. But overall, what I just want to say is, and obviously, you know, when we had the first lockdown and the first kind of COVID-19 kind of hit the planet in February and March, then there was a market reaction to something unexpected. That's kind of what we can see here. So yes, we could have something unexpected hit us. That's always going to be the potential danger. But that aside from that, the markets are looking are appearing very optimistic, seemingly bullish, and therefore, and at this point in time, there's very little other than the fact that it is overextended, which tells me we do need to have a bit of a deeper correction, which, to be fair, could actually happen in early 2021. We could kind of come back from Christmas, the market takes a breather then, and then picks up again in spring. That's the kind of thing that can happen after the Santa Claus rally, which is usually in the bullishness running up to Christmas. We started on the Dow to break free of this consolidation. Nice little flat level breakout there. Nice round number, 30,000. It's starting to push higher. The weekly is a little bit overextended, but not ridiculously so. That monthly is now starting to head into that area. So possibly the market's going to head towards 30, let's call it 31,000, and then reassess how they feel, maybe 30,500. But let's kind of keep that in mind and keep an open mind on this. But so far, looking all right. The momentum indicators are, the RSI is okay. It's not super happy about everything. It's not that unhappy. And the MACD is also a little bit flat for my tastes. I would like to have seen them looking more bullish than that. So that just means that caution would be advised. For me, that means in practical terms, reducing my risk per trade down. My position sizing is half or a quarter or a third of what it usually is because we're in this. And now that has been the case for large chunks of the year, but that's not how I was during this period. Quite happy to go at full risk during periods like this, but as we become overextended or we start to sit into a consolidation or we come into a key level, I then start to reduce my position sizing. Look at the S&P 500, also starting to push higher. This looks really, really nice. Very happy with that. A little bit overextended on the weekly, but all of this pretty bullish. That monthly now also starting to reach overextension. So that danger means somewhere between, say, 3.7. Look at us, 3.698. That's where we are. We're close to that. 3.7 could be a bit of a battle for this, but otherwise it's potentially eyeing up those next round numbers, 3,800. So taking a look at these this week, I'll do a summary in a moment. Actually, let's carry on with this. Let's look at the Russell 2000. That's really nice and bullish, and this has been a star performer. It is absolutely overextended on the monthly, but again, no more so than all of them really. They're all due for a correction. That looks okay. It is certainly, if you look at the average distance away from the moving averages here, this is further than we've gone in a while. So at some point, I would like to see a pullback into 1800. But in order, if it is ultimately going to pull back into 1800 and that becomes price support, then it might as well just carry on to 2000. So I think that would be psychologically significant, the Russell 2000 hitting 2000. And at that point, you know, that puts us up here on the monthly. It's possible. It's not impossible. It's definitely overstretched, and a correction at that point would be quite a big one, I think. But so cautiously optimistic on it. If the markets were inherently weak, you know, they wouldn't be able to do this. We've got a bullish outside, very bullish outside bar looking at the FTSE 100. And I'm very happy to see that being the case here. We've got a confirmed uptrend, higher lows, higher highs on the monthly. We've broken back up above 6,300. I'm very happy to see that. Look, I think this is deviating a little bit from pure technical analysis, and this isn't something I do very often. I would like to think that we're kind of reviewing the quality of our lives these days as a result of kind of lockdown. And I think that part of that might potentially also be any kind of disproportionate gaps in terms of earnings and quality of life and anything where things are potentially not as good as they should be. And so I'd like to think that we're going to start addressing those issues in 2021. And so I'd like to think we're optimistic in that sense. I prefer today to take a glass is half full approach. I think rather than saying that that's my default nature to do that, I can be just as cautious and bearish or pessimistic as the next person, but the markets appear to be, very keen to change things, and hopefully there's a subsequent knock-on effect where businesses are keen to recover, and there's a treatment for coronavirus, and small businesses can cope. They get the appropriate stimulus support which they need, instead of it going to the bigger corporations who really don't need it, because of the ones who benefit from their major tax breaks. So it's not I'm not trying to take a political approach here. I'm trying to take an economic approach here. We do need to have ideally, in order for an ecosystem such as this, which is man-made, to survive, we need to have a flow from top to bottom. And so we need to kind of see that happen. That's really where I'm coming from. So this looks really good. Can it get through 6550? Potentially it can do that. Overall, I think the big one was really getting past 6.3. So I'm very happy to see that happen and break through these previous highs. So again, and it's not that overextended now. So continuation from here up to 6.8 is possible. I'd really like to see a breakthrough and a pullback to 6.550 as support, and then a swing trade to the upside would be great. So I'm leaning, plan A is for bullish expectations on this. And of course, there's always a possibility that if the market, for example, looking at DAX, if there's an unusual drop below these previous lows, falling through key levels, then I will immediately during the week or midweek reassess that. But for now, I expect that to continue on. So here, for example, we've had price break up, break past previous highs, come back, produce a nice little bullish candle. This may indeed be a potential buy opportunity that could be occurring here on the DAX. If I'm an intraday trader, that's fine. I can come back and visit it and then look for price to move on. But I do really want to see this creep past. The DAX is rare compared to the others in that this is kind of close to all-time highs, but also, or certainly highs going back to over the last 4 or 5 years, and needing to get past this range. There's just a bad patch. I want to see it get through that. But I can't see why, if everything else does it, why that won't do it. Look at the French CAC. That's a really nice bullish continuation behavior. A little bit of a slowdown here, so it is coming into that. It's obviously at that key level, but it's starting to push through these areas. And I'd like to think it can push a little bit higher, and then it's got room to go. So you might see 5,800, 6,000. Let's see, unless we get one of those very unexpected, sharp bearish corrections. Looking at Euro stocks, similar. There we go. That was action identification of a setup during the week. And this is almost, the two of these are kind of like siblings. They're very similar in their current behavior and setup. Looking at the Nikkei. Nikkei is preparing here for a little bit of a retracement, but actually the way that it's done in the past, it might not even connect to the moving averages. It could produce a bullish candle here and simply just carry on without connecting with that. It is certainly away from the moving averages on the weekly. It is absolutely now, it's had a fantastic breakout. So possibly it will peak at 28,000. But where it is now, at any point, all of them, I think, would be nice to have a monthly correction on that. So that is going to be a potential. But I'm leaning towards them probably desperately trying to push a little bit higher, seeing as we're at the start of December. And they can often, you could get that kind of Santa Claus rally, and therefore they're more inclined. We might find that they start to lean higher rather than taking the breather now and then just take a big breather in January. Here's the ASX 200. Beautiful, nice swing low. That was really quite a big candle, so not really ideal, but I did mark that as a potential swing low. The weekly doing a little bit of a retracement here. So there are signs here that this is going to attempt, this would mean that this would push on towards 6.5 and, past 6.5, 6.750 and 6.7 in its kind of near future, 6.8 in this area. That's really interesting. Sorry. So when I say 6, 750 and 7, I mean 7,000. So pushing up at this point anywhere into this area. So I'll be looking for those to be the case. There's no there's no non-farm peril. There's no interest rate announcements so far. Anything that I think the whole planet could be waiting on, I don't really see that. I think, yeah, it's pretty much a given that there are going to be some forms of treatments that are going to be coming out in the next 6 months. And so all we really have to do is contain the virus, obviously by doing smart things like listening to science and wearing a mask and trying not to do anything stupid by exposing ourselves and anyone we care about to this kind of thing. That's how it works. And then if we could just survive that patch while keep the numbers down. We've seen in the UK, just in the recent lockdown, I don't know if people know this, but we've seen the infection rate drop by 30%. And that was last week. So if another week, possibly it's dropped further or stabilized. But we see an immediate impact when we go into a lockdown if people behave. So we just need that to happen so we can get the numbers reduced, so businesses can adapt from working from home, stimulus can manage to kind of do what it's supposed to do, and at the same time that optimism is there. I think everyone's feeling a bit of cabin fever, and therefore that's why there is optimism. Everyone's like, you know what, if we can just get back to work, we can kind of do some good things. So just wanted to finish. I'm going to wrap up on that. That's a slightly longer video today, but that's it. So far the markets are predominantly, that's my trading plan. Plan A, they look bullish. I expect them to continue to attempt to climb higher. Yes, at some point we could have some unexpected bad news. That's always going to be a danger, but I'm not going to say that that's likely to happen now. I think in many cases they look better than I would expect them to, and therefore I think they can afford to push a little bit higher before having a bit of a correction. Even the NASDAQ, which is one I've been moaning about for a while. And that's it. So I'll be monitoring them. Any sharp expected drops where we break these previous daily swing lows, any of those, if I see that happening across the board, then if I'm not in any positions, then I'll immediately kind of bench myself and reassess and kind of try to determine what caused the shake and then take it from there. All right, and that's it. I'll leave you with this, and looking forward to seeing how the week plays out, and there should be some good. I'm optimistic that overall on commodities, on currencies and indices, we've got some potential money-making opportunities here, so we can have a decent December and then wrap up and go home, or we're already home and spend time with loved ones and enjoy Christmas. Thank you very much. Have a good week.